A lot of people ask me how I got started in real estate and what I'm doing currently right now. To sum it up, I've actually bought 11 properties, I've sold 5 of them, and I've built 1. In this video, I'm gonna detail from beginning to where I'm at right now of exactly what's happened.
Live behind decisions I chose. Peaks feel good and the valleys get low. Chains for the tires in the rain, hail, snows. Like this everywhere that I go, everywhere that I go.
Hey everybody, it's Hussein Kabani, your favorite broker, and I'm here to tell you a story about how I ended up buying my first piece of real estate. That was all the way back in 2004, and I was 20 years old basically. And if you guys have watched some of my stuff, you guys will know that since I was a kid, I was really interested in real estate. The reason I was interested in real estate is because I always look at people. We grew up kind of in like nonprofit, collected welfare and that type of stuff. And I always look at other people, and I never wanted to be in that kind of a situation. So, and somehow I always engaged with like older people than I was, and I got to see what they were doing. So it was kind of fluke that I got to interact with different type of people. But what I realized from all of that is that they invest in real estate. They invest in real estate for the long run, and they're becoming wealthy through investing in real estate. So not really knowing anything, that was really my target of saying, hey, like I need to invest in real estate. I need to buy a place to become wealthy or at least financially stable. And the other idea to that was that, hey, listen, you know, even if I buy this condo or whatever right now, it has a 25-year mortgage. And what's the worst case situation? In 25 years, I'm going to own this place. So I won't be homeless. I won't have to rent a place. It's going to be my own place, and I'll have to pay the servicing costs associated with it. So that was kind of my mindset at that time when I was even actually 17, 18. This is when I strongly got interested about doing something like this. It took me until I was 20, 21 to actually execute it. But the way I went about it was that it was more popular, I think, before, because having access to the internet and sites like realtor.ca was very limited to have on your mobile phone at that time. Believe it or not, it doesn't seem like it, but it was. So I would always get these resale home magazines through these yellow boxes that you see on the street, and I would like all the time, every week I would get a new one. I would go through it, I would check for condos, I would check for the cheapest stuff and whatever in there. And ultimately, I ended up contacting an agent that had a place at Jane and Finch. It was a condo. If I remember correctly, it was like $45,000, somewhere in that range. And I was like, that's great, 45K. Like, I get it, Jane and Finch a little shady, but what are we gonna do? Let's just go through with this thing. So I called the agent and I'm like, hey, I see you got this listing over here. It's 45K. I'd love to take a look at it. They're like, awesome. So we're not going to show up. So you could just go ahead and ring the buzzer and they'll let you in. And if you're interested, just let us know. It's like, wow, man, this person doesn't even want to show up. And I figured out why, because I showed up. And the area looked real ghetto. I'm sure it's changed since then, not hating on Jane and Finch, but it was really ghetto when it appeared to me anyways. And I looked around my car, my mom, and I think my sister was with me as well. And I basically just said, whatever you want, I'd carry it with you when we leave the car. I'm just saying. So we went into the building, everything is broken right from the foyer. I'm pressing the buzzer. You see like people not really on the up and up, like around the area and whatever else like that. No one answers the buzzer. I think that was a blessing in disguise. So we just kind of go away and whatever. And next day I just continued my same thing at lunch. I was working in a warehouse at Sherwin-Williams, a temporary worker. I made like $9 an hour. And I'm just flipping through this magazine, looking. And then I contacted this other agent. His name is Danny, and he's still an agent with RE/MAX. I don't know if he'll remember me, but he's still an agent with RE/MAX. I think he worked with his brother, and I think his son is in the business now as well. But I contacted him, and I was like, look, I wanted to look in this area, whatever. And he quickly told me that, hey man, like I don't think that's a great area for you to be in. So he was knowledgeable about that. And he's like, I have some better options for you. So he actually showed me a place at 100 Dundalk, which is basically at Kennedy and 401, just south of the 401. And he showed me a building in there. And he showed me a couple of other spots. But we ended up really liking this. We saw 2 units over there. My mom was with me as well. So we ended up seeing a 1+ den, and it was nice. And then we saw a 2-bedroom, which was actually owned by an investor their whole time that they actually had ownership of this unit. And they rented it out consistently. And now they moved to Florida. So they were like, we're just gonna sell it. They renovated the whole unit. It was still a little ghetto, but they renovated the whole thing, and they were just looking to sell it. It was listed, I think, at $119,000 or something, and we ended up negotiating a deal for $116,000. So that was my first condo, $116,000. Now, the deposit that they wrote, and you guys may know this when you purchase a property, is $5,000. So I didn't even have the $5,000, but one way or the other, we scrambled up with it and we got it. And long story short, we got into the door of this place. Now, when I got into the door of this place, I really knew that I didn't want to be here forever, and I wanted to kind of like try to find a better place. This place I got into because this was the only thing I can afford at the time. So I was like, I need to get in here, and then I want to try to figure out how to make a move. Luckily, I got laid off at the place I was at. I ended up working temporary at another place, and I ended up actually moving through that organization. So while I owned this condo. So what I actually did is that every time, and I was fortunate, I got enough pay raises and stuff like that. Still wasn't making massive money, but there was a pay raise involved. But what I did was I kept my expenses low all the time. And what I did was any raise I got, I actually continued to pay the mortgage. So I had my mortgage with PC Financial, whatever the amount was, my increase was, it maybe net, it was like $100 or $200, something like that. And I would actually call them and say, hey, just can you increase my payment from this to this? So whatever my net increase was for my increase in pay, it would actually just automatically get deducted. For me, it was a forced savings. So, fast forward a few years down, like I think I stayed at that property for like 3 years. So I actually had gotten a better, like same company, but I was in a better position, making a bit more money. And what I did was I took on that mortgage at $116,000, basically what the purchase price was. It ended up after expenses and everything else like that being around that same number. I think I worked it down to like around $85,000 after just constantly paying into it and not doing anything. This means no vacations, no extras, no nothing. I think for the first 6 months I lived at that place, I didn't even have a cell phone. Literally had a free pager. I don't know if you guys are old enough to know that there was a service out there that you could pay one time, like $100 or whatever, and you get a pager. It was free after that, but you'd have to listen to some advertisement every time, or they'd text you with an advertisement. It's pretty ghetto. But I'd go down to the corner store and use a payphone there if I had to call somebody. So it was 6 months of very ghetto-ness. Didn't have internet or anything. Even when we bought this place, the mortgage rate at that time was 5%. So I still kind of managed to pay it down. And even when we were buying it, the market wasn't that crazy. There was actually a lot of incentives out at that time as well, because the market wasn't so crazy. There was a company, there was a program through Wells Fargo that you could actually defer your closing costs. So literally you didn't have to really pay anything on your closing costs. They would defer it for 6 months, and then you could pay it in 6 months. And if you didn't have it, then you'd pay these monthly payments until it was paid off. And I think I did that for like almost 2 years, and it was like $280 or something like that, and I paid it off. So really it was a lot easier, I would say, to get into the market. The rate is more or less kind of the same. Maybe the rate's a bit higher right now, but it was kind of the same to get into the market at that time. So I just focused on kind of paying down that mortgage. And obviously when you put your 1 foot forward and you get to a certain spot, you can see a little bit more clear. And you start, talking to different people about different things because your experiences are a little bit different. So you get to learn a little bit more from other people's experience because you have something to share. So from that, what I did is that I started looking at condos that were more like centrally located. At this point, I was still not able to afford like a townhouse or a detached house or anything else like that. So I started looking for condos that I thought would have a better rate of return and a better investment overall. So I looked at Young and Finch and Young and Shepherd. So my second place actually ended up being at 155 Beecroft, which is at Young and Shepherd. Even at that time, the agent, the listing agent was the seller, and he actually had set it up for a multiple offer. I'm trying to think what the price was. I think it was like $285 or $280 for a 1+ den, and he set it up for a multiple offer. Well, we showed up with the offer basically at full price, and he had nobody else. So he tried to say something like, it's not actually today, it's the next day, or something, like trying to delay us or something. And we're like, dude, we have a full price offer, or we have conditions or whatever else like that. And I think the guy was nice enough, and he's like, okay, fine, like I understand your situation. So he signed off on the deal. Long story short, I ended up getting that as my second property, and turn around, and then I sold the first place. Interesting thing is that I bought that place for $116,000, the first place, and I ended up selling it for $113,000. So I actually sold it for $3,000 less than what I purchased it for. But the upside for me is that I continued to pay down that mortgage, and I put literally every penny I had to paying down that mortgage. So I had a decent enough down payment to put into this one. Still wasn't 20%, guys. So the first place I got hit with CMHC, the second place I got hit with CMHC. I think the second place I only put down like 10% or like 7%. It was a weird number, but like it still wasn't the full 20% down. And that's where I think things started to change for me. So that was 2007. And in 2010, I started shopping around. My pay again increased a little bit. I was still on that same track. Every excess money I had, I would pay it down. I remember a friend I had at that time, because that was the first year, I think one of the first years in 2010. I was fortunate, I worked really hard. Like even my corporate job, I think people that work with me can attest to it, that they thought I was nuts that I would spend so much time there. But I think I still spent like 16 hours a day at work, corporate job, not getting paid anything extra. I had a salary, but it just led to them giving me better positions, which came with better pay and whatnot. And then so in 2010, I started looking around again and looking and continuing to follow the real estate market, and said, you know what, I think it's getting to a point right now that if I don't get into a freehold or a detached property, it's probably going to become very, very tough for me. So at that time, I realized that, you know, I could probably get around like 310, 325 for my condo. So I think there's enough seed money over there to move things forward, because I think I worked that condo down to like somewhere around 180,000 or 150,000 that I was owing on it, because I was aggressively paying it off. So it led me to saying, hey, where can I buy a detached property? It's going to be a single car garage, but where can I buy a detached property? My two options came up was Brampton and Pickering. That's the closest I could get to the GTA. Now, I'm not gonna trash Brampton, but literally I went to Brampton, I looked at some houses. My uncle happened to live in Brampton, so I went to a grocery store there to take something with me before I went to his property. And I could just tell you that based on what I saw in there, I'm not gonna get into the detail, it's just something I didn't want to be involved with. So Pickering, on the other hand, was an area I really liked, and it was really up and coming. So I went and visited a Mattamy site, which is Duffin Heights right now, and I ended up purchasing a property over there. So that was June 2010. I bought a freehold, single car detached with my upgrades and everything, and it ended up being like $422,000. So it was a detached single car garage, 4 bedrooms, and I think the square footage was just around 2,200 square feet. So really decent house. I still like that house. It was one of the best layouts of a house I've had, but $422,000. So I actually ended up closing on that. That was like January 2012. So I ended up closing on it in 2012. And I ended up selling my place in November 2011, the condo, and I sold that for $325,000. So at that time when I went to sell that, I was actually a licensed realtor. That's actually the first property I've actually ever sold. So that was October or November 2011. So that was the first property I've sold. And I had a gap of around 2 months. So I actually had to go to like an Airbnb type of spot, put everything in the storage and moved into that place. So fast forward, January 2012, I moved into this property. You know, things were going well with my business of starting to become a realtor. Things were really going well with me, and I was starting to make more money. And again, following the real estate market closely and being ambitious as I am, I said, I want to try to move this thing forward. I think, you know, we got a good price on this. I think the appreciation is going to be good on it. So I started looking around, and I ran across another site in Pickering, which was a Marshall Homes site on Fairport Road. And I actually signed a contract for that place, but that place is called a Pottle, and I've explained this before. It basically has a monthly fee, and the other thing is that the lots are a little bit tight. So I ended up not going forward with that. We had a 10-day period to kind of go through the contract, see if you're comfortable. I didn't go through that, but kind of right across the street, I ended up meeting this awesome builder, which I still continue to do business with right now, Louisville Homes, and they were building an infill on Wind Garden, and they had this trailer that they were selling out of in July 2014. So I was there, I talked to Amanda over there, and everything seemed really, really nice. And the prices were, in my opinion, at that time for me, they were higher. So long story short, I committed to buying, and I changed a bunch of times. So I'm gonna tell you the end story, which is I ended up committing to buy a lot that's 45 feet by, I think it was 120 foot lot. The house itself was about 3,500 or 3,600 square feet, and the base price kind of on that was $900,000. I think at the end of the day, when I closed on it, I closed in for about $1,150, and I probably had 1-2 in it after some landscaping and appliances and whatnot. So I bought that in July 2014, and I ended up closing on that, I believe, in November 2016. So that was that was an ideal type of home in my mind. Of when I was a kid, I pictured a house, that was it. It was detached, double car garage, it was big, and whatever else like that. But you know, knowing how ambitious I am and whatnot, I've already at this point have started to invest in other properties, other investment properties, because I was able to realize that I could take some of the equity I have out of this property and start investing. So at this time, I already had bought a place in Oshawa, and I closed on it as a rental, and I've already put down a down payment on another Mattamy property that was gonna be ready in a few years. So I've already had these things going on the side with the equity that I already had in existing property. So now that I moved into this property, I was like really looking forward to saying, hey, what else can I do? I instead started investing more into other investment properties. So I bought another property jointly with my brother, and then I bought another commercial unit. I invested in some land, and the land investment I did, there was 0% chance I would have been able to participate in this purchase if I didn't have the equity in the house, because I'm gonna just tell you guys how it was. It was $400,000 cash that you need to come up with. Like the purchase was 1.2 million, but I need $400,000 cash. The people that were buying this property with me, they have the cash on hand. No one's getting a mortgage, and even to get a mortgage for land is next to impossible if you ever tried. And if you do, it's like 50% down payment or more, and the interest rate is nuts. So if I wanted to participate, I had to have 400,000 cash. So luckily I have enough equity built into this property that I was able to participate. And even if I just sidetrack the story right now, this land, we're gonna basically almost double the investment, if not triple the investment that I was able to put into this thing at the end of the day when we end up selling this property, or we have an exit on this property. But this all came through everything that I built through the residential properties that I actually lived in and built up equity in a disciplined manner. So even after this house, as you progress, like I said, you go step, you see the next thing and you get into different conversation. I was super interested in actually building a place at that point. So where we're filming right now is something that I had I would say a pretty big hand in actually having built. It's a design that I came up with. I can't use AutoCAD, so I drew this whole thing out in Excel, and I showed it to the builders. They thought it was a little nuts that I drew out this whole thing. But the same builder, Louisville Homes, I worked with Amanda and her father, Nick, and we came up with the design of this house and whatever, and it was an awesome experience. Very stressful at times, but an awesome experience. So I got to experience actually having something built from the ground up. So that was another experience all on its own. Even in between, we closed on other properties, moved into them, and experienced living in those as well. So that's kind of been my real estate journey. Now, sitting in this house over here, it's something that I wanted to do, and I've started to engage in conversations with people that I know that are even smarter than I am, and I'm like, hey, like I don't actually need all this house, so I might even be in the market of selling it at some point, right? But it was a goal that I had to actually build it and see how it is, and I thought it's something that I wanted, just like you guys have probably experienced, where you guys really want something and you get it and you play with it for a little while and then it's off to the shelf, right? Well, I can't shelf this house, but we're gonna have to do something about that one way or the other. But it was an experience, and that's where my real estate journey kind of led me. I mean, what happens from this point moving forward? We will do another video about maybe investing outside of the country and looking at other opportunities. So I want to kind of sum this up from my experience anyways, is basically it's about being ambitious and disciplined enough to say, hey, what's next? And keep pushing the envelope, because I learned a lot, I gained a lot along the way, and it's brought me to a point of where it has kind of resulted in a bit of financial freedom, and it gives me the opportunity to risk a little bit more and invest in other areas where I would not have been able to if I hadn't gone on the journey I have. Now, everyone will tell me that that was a different time, this is a different time, and I 100% agree. Can I do the same thing that I did from 2004 until 2024, like that 20-year mark? There's no chance. There is absolutely no way. I don't even think I can accumulate half of the stuff I have over the last 20 years if I was to start again today. It would be a very difficult thing. Not to discourage you and not to say it's not possible, but it would be very hard to do the same kind of thing. So we always have to have our what we're expecting to get in check out of it. I still think it's a very good thing to do, invest in real estate for the long run. I think it'll still take you places, but just like I can't replicate what I did from 20 years again. There was two clients I was talking to. They both immigrated from India. They were both in schools. They both have great jobs. You know, in the last 10 years, one of them were, luckily able to own a total of 3 properties. One is able to own 2 properties, and they were over in Christmas time. And I asked them, can you replicate what you did with the resources that you had again? And their answer was still no. So this leads me to saying like, hey, there's still opportunities out in the marketplace, but there's going to be a different approach to it. And I think that some of the key principles will still stay the same. One of the key principles is that you're not going to get what you want. want. Likely, the chances are you're not going to get what you want right off the hop, okay? Unless someone else is sponsoring your dream, you're probably not going to get what you want. So you're going to have to kind of get in the door and try to figure out things from there. But have that ambitious, that drive to say, hey, how can I move this thing forward? You know, there may have been some properties along the way that I disposed of that maybe in the back of my mind right now, I'm like, you know what, that would have been a cool property to still hold on to, because I still go back and watch the appreciation on these properties. None of them have ever lost. Like that $116,000 condo I bought, which I call in a little bit of a ghetto area. It's a nice area still, honestly. I think it's still a nice area. That thing I haven't checked in a while, but last time I checked, it was $450,000. Like, that's still a pretty damn good increase. You know, $300,000 and change over 20 years, that's a huge increase when you invested $100,000 into this property. So in the long run, you can't go wrong. You still have to have the same kind of discipline moving forward. Now, I know we've touched on it before, but what would I do if I were in your situation? If I really believe that the real estate market in the long run is going to be good, our economy is going to be good, and you believe that you want to buy a product, okay? You want to buy a house. I would basically get into something that I can afford and I'm comfortable paying the payments on, and I would plan on being there for long term. At the same time, once I get in the door of that, I would continue to have the relationship that I have with my mortgage broker at the time, and basically share with them what your plan is. And if your mortgage broker is a forward-thinking person and your realtor is a forward-thinking person, you're going to keep in touch. They're going to keep in touch and figure out a plan of how you can move this thing forward in the next few years. And there's different opportunities. You can sell that place and buy a bigger place. You can refinance that place, hopefully, and you can rent it out and you can move on to a different place. Or you could just take out equity and invest something else. You could invest it in the market. You can invest it into a different country, whatever you feel comfortable with. My point is that if you don't start, you're never going to be able to build that nest egg. I want to just say that think about how you're going to build a nest egg. Like, and if you think you're going to invest it through stocks and be able to manage it through stocks or the S&P 500, whatever you're going to do, I don't play those games, so I don't know how that actually works. But with real estate, over the long period of time, I'm almost confident that you're going to be able to build a nest egg that you can actually do something with. Because if you don't start stacking that cash in equity right now, in 5 years or 10 years, I think it's going to become even more difficult. Here, I'm telling you that you have hope. Maybe if we make this video in 5 or 10 years, I'll tell you don't have hope. Or maybe you don't have hope in the GTA, and maybe you're going to be on very much the outskirts of this whole thing. So this has kind of been my journey through real estate. And as much as I think I do well in my business of selling real estate for my clients, buying and selling for my clients, I think I actually do better overall if I look at it from my own investments. And like I said, that wouldn't have happened if I didn't have the nest egg to actually invest to begin with. Now, I've been saying this lately, and it's true. Everyone's situation is completely different. So I'd be more than happy to talk about your thoughts of forward thinking. I love to engage in these conversations, and truthfully, I don't have enough people to talk to about this. So you'd actually be doing me a favor at this point if you guys click below on my link, book an appointment. Let's talk about what your goals are, what your specific things are that are going through your head, and generally about the market and how you can get started. I'd love to have this conversation with you guys. So if you guys are interested in that, book the appointment, love to chat. And if you guys have enjoyed this video, I know it's rather long, but if you guys have enjoyed it and got some value out of it, please like it, share it with your friends, and don't forget to hit subscribe because I make awesome videos. Until next time, guys, remember one thing: get Kabani, get sold.
Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.